The housing market's been throwing curveballs lately, and it's back with yet another unexpected turn. You can now become a homeowner with just a 1% down payment. Yep, you heard that right. But before we break the confetti, let's unravel the plot. Mortgage rates are climbing to heights not seen in over 2 decades, and home prices are soaring like they're trying to reach the stars. So, what's cooking behind the scenes? Are these 1% down loans as straightforward as they seem? And could we be on the edge of another real estate crash? Let's take deep dive and find out. But before we continue, we would like you guys to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on any amazing and entertaining content. Let's dive straight into the facts about the housing market. No need to emphasize what you already know. Housing prices are through the roof across the nation. They've soared a remarkable 44% higher than pre-pandemic levels. Mortgage payments have followed suit, spiking by a staggering 54% in just the past year. It's a wild ride out there, with buyers and sellers eagerly awaiting some sense of stability. But amidst all this, Zillow, a big name in real estate, has just rolled out a mortgage product that's raising eyebrows. And it's not just for the well-heeled. They're offering a tantalizing proposition. Buy a home with only a 1% down payment. Typically, when you're in the market for a home, you're expected to cough up anywhere from 3.5% to 20% of the purchase price up front. Depending on your loan, that means forking over a substantial chunk of change just to close the deal. Take a $350,000 home, for example. You'd need to dig deep into your pockets, anywhere from 12 grand to a whopping 70 grand, just to make it happen. But Zillow's game-changing move is to allow you to put down just 1%, and they'll kick in an additional 2% at closing. This program is designed to slash the time it takes for eligible home buyers to save up for that dream home. It opens the door for those who've been stuck in the endless loop of high rents, unable to squirrel away enough for a down payment. With Zillow's offer, they can potentially trade their rent for a mortgage, finally getting a piece of the housing market action and building equity. Sounds fantastic, doesn't it? But before you break out the confetti, let's take a closer look at the fine print. The reality is, most folks watching this will likely face some hurdles. First off, Zillow's program for now is only available as a pilot in Arizona, and it's aimed at first-time homebuyers earning less than 80% of the area's median income for Phoenix. In simpler terms, if you're single, your income needs to be below $25,456 a year to qualify. But don't get too excited about mansion hunting just yet. With no other debts to your name, most lenders would allow you to spend around $933 a month on housing. At a 7% interest rate and a $100 Homeowners Association fee, that puts you in the market for a home worth around $110,000. In Phoenix, that means you've got a choice between a 1-bedroom, 1-bathroom condo for $103,000, or another 1-bedroom, 1-bathroom option for $98,500. Now, let's dissect how this Zillow magic works. They tap into local first-time homebuyer grants to provide you with upfront cash at closing. In exchange for their efforts, Zillow likely takes a small cut of the action. Now, don't get me wrong. I'm all for helping people who wouldn't otherwise have a shot at homeownership. And it's worth noting that these loans don't saddle you with PMI, private mortgage insurance, which is usually required when you have less than 20% equity in a property. But here's the rub. There's more to this homeownership game than just the down payment. Which brings us to the closing costs. This little bundle of expenses includes things like inspections, appraisals, notary fees, escrow fees, insurance fees, and a slew of other odds and ends that they'll slip into the mix just because they can. Typically, this adds up to another 2% of the purchase price. So, in reality, you're looking at needing more like 3% just to cover these closing costs. And if we're being really practical, you'd want to aim for closer to 5% to handle things like furnishing your new place, building up some savings, and covering those property taxes. So, while Zillow's offer might not be quite as miraculous as it first appears, it's still a glimmer of hope in the often daunting world of homeownership. What's even more intriguing is that Zillow isn't the pioneer of this concept. There are other players in the game offering the same deal to everyone, regardless of their location. Believe it or not, these have been available for over a year now. thanks to none other than Bank of America. They launched a pilot program to assist first-time homebuyers in underserved neighborhoods across cities like Charlotte, Dallas, Detroit, Los Angeles, and Miami. This initiative enables individuals and families to secure an affordable loan with no down payment, no closing costs, no PMI, and here's the kicker: no minimum credit score requirement. While these loans were originally intended to aid underserved minority neighborhoods, eligibility is primarily determined by income and the home's location. Buyers are also required to complete a homebuyer certification course before applying. Now, even though it's technically a no-money down loan, Bank of America sweetens the deal by making a down payment on behalf of the client in the form of a grant, up to a generous $15,000. This immediately injects home equity into the equation. So they're not just buying a $400,000 home with a $400,000 loan. The moment they close, they've got $15,000 worth of equity in their pocket, just in case the market takes an unexpected dive. Let's get down to brass tacks about the impact of these low or no money down loans on the housing market. Offering no money down loans in a climate where median prices and mortgage rates are peaking can be a gamble. Imagine you snag a $400,000 home with zero down, add a generous $15,000 grant from Bank of America, and take out a loan for $385,000. Fast forward 1 year, and if the market doesn't budge, you manage to sell your home for the same $400,000. After the 6% commissions and closing costs, you're left with $376,000. Not too bad, right? But here's the kicker. If the market dips just 5%, you're looking at $357,000 post-closing costs. Suddenly, you're staring down the barrel of a $28,000 bill just to unload your home after just 1 year. Now that's a substantial risk. The type of person going for no money down deals is often not the same type who can cough up a hefty sum if things go south. Unless prices keep skyrocketing, they might find themselves shackled to those monthly payments, whether they can afford it or not. While these deals could potentially help a lot of folks, remember that banks are in the business of making money. Ultimately, the choice to buy a house boils down to you. Owning a home comes with responsibilities. Think property taxes, insurance, maintenance, and a never-ending stream of unexpected repairs that somehow pop up at the worst times. It's all part of the home ownership package. Plus, a recent study found that renting is the cheaper option in all but 4 major US cities. So, before you dive headfirst into the world of no money down loans, weigh the pros and cons carefully. It's your financial future on the line. Now, let's explore the brighter side of these low or no money down loans. They can be a real game changer for folks with a stable income, those who find themselves pouring their hard-earned cash into rent without much room for savings. If you're planning to put down roots and call a place home for the next decade or more, these 1% down mortgages can be a real blessing. But, and here's the twist, in the short term, you've got to remember that life's unpredictable. Sometimes, it's worth paying the rent premium just to keep your options open. Flexibility to downsize or relocate can be priceless if life throws you a curveball. Now, on a different note, let's talk about the housing market's mood swings. According to the data, it's not far-fetched to consider a potential dip. Morgan Stanley, for instance, believes home prices might start their descent next year, after a relatively flat 2023. When I say flat, I mean national prices have inched up a mere 1.2% in the past year. Even in this scenario, their prediction is a modest 2% drop throughout the entire year. So, if this crystal ball gazing comes true, it won't be earth-shattering. However, Zillow seems to be dancing to a different tune. They're placing their bets on a home run, projecting a whopping 6.5% price hike by July 2024. Why? Inventory is scarcer than ever, hitting historic lows. Strangely enough, as interest rates rise, sellers are less inclined to part with their properties. This scarcity is pushing prices even higher. Goldman Sachs, too, has joined the chorus, predicting no price declines in 2024. Yes, it sounds odd with mortgage rates breaking the 7% barrier, but low inventory is creating a home-buying frenzy that shows no signs of slowing down. Now, when it comes to the overall market, it's become a bit of a head-scratcher. Financially speaking, there's not much that seems like a smart buy. I won't sugarcoat it. There are not a lot of opportunities for most people at the moment. So, there you have it, the tale of the 1% down loans. But we're not done yet. We want to hear from you. What are your thoughts on this real estate frenzy? Drop a comment below. If you enjoyed this video, make sure to hit that subscribe button and don't forget to give this video a thumbs up. Thanks for watching, and we'll see you in the next video.